Major banks see $2,300 gold. Fed early rate cuts. Shocking. Let's start.
And what happens in economies, people buy things that they want to hold, such as Bitcoin, things like gold. Problem is, when your house payment comes due, well, the problem is you got to sell.
That's Steve Van Meter telling us the first reason we could be seeing $2,300 gold. People are moving into tangible assets like gold, but they may need to cash out soon. He's looking at banks and sees tighter lending standards, and that means less money in the economy. Less people are able to take out loans. Less people are able to turn to regional banks. Just look at what's been happening with regional banks lately. These banks are drowning. I mean, they're overwhelmed with these commercial real estate loans that are set to pop. I mean, they're maturing within, as this year plays out in 2024, those loans are going to mature, and those regional banks are really tightening. This impacts everybody. The regular, everyday, normal people, those are the people that rely on regional banks. And they rely on those banks to foster the economy, right? To create businesses, to put money, and just what Steve Van Meter is saying is put money into the economy. So when that's taken away, that means that people do not go into treasuries. They pull away from this fiat currency world, and they go into tangible assets, specifically gold. And that's one of the reasons we've seen such a nice bump in this, right? In this gorgeous precious metal of gold. This past 3 weeks now, almost 4 weeks, that we've been up around the $2,200 range. And as this plays out, that is certainly the first reason that gold can continue and hit the $2,300 gold mark. Along with this could force the Fed to cut rates early, right? We're expected to wait until June. And as things tighten and as it's difficult to get money into the economy, the Fed could be forced to cut rates early. This delicate balance that we see between unemployment and the interest rate, and it might be earlier than June. So for us in the world of precious metals, we actually like to see that. We like to see interest rates cut, because a low interest rate means that people are going to go into precious metals more, and the value of this metal that we've been stacking for so long is going to really keep going up as more and more people get into it. Now, the other call that we're hearing for $2,300 gold comes from Goldman Sachs, actually. And Goldman Sachs, this is an article on Yahoo Finance. It says, gold's record March higher set to continue, Goldman says. And this article tells us that gold's roughly 8% month-to-date rally has room to grow, with the precious metal poised to hit $2,300 an ounce by year-end, according to Goldman Sachs analysts. I would really be happy to see $2,300 gold. I would not be able to, it would be out of my reach. I would not be able to stack more, but from my gold holdings, $2,300 sounds very exciting to me. The article continues. It says, on Monday, futures gained to trade as high as $2,182 an ounce. The precious metal is considered a safe haven during times of geopolitical tensions, which is exactly what we're living through. A safe haven during times of geopolitical tensions. The more that these wars rage on, the more that the struggle in Ukraine, the struggle in the Middle East, the more that this goes on, people feel uncertain, and gold is the safe haven. So the article says, when interest rates decrease, last week, the Federal Reserve continued to signal that it would lower interest rates 3 times this year. The Fed meeting reinforced the markets and our expectations that 3 cuts are likely this year, lending renewed support to gold to test and surpass March's earlier record high, wrote a team of analysts led by Samantha Dirt. Goldman Sachs analysts upgrade their average gold price to forecast for 2024 from $2,090 to $2,180 per ounce, targeting a move to $2,300 by the end of the year. This actually, if you had asked me a month, 6 months ago, if you had asked, "Oh, do I see gold reaching 2,300?" I would have just rolled my eyes. I really would not have seen that. I would not. But this past month has really gotten. I mean, when I look at this gold, I'm getting focus there. When I look at that, and I think how after the financial crisis, gold broke through that $1,000 level. Silver shortly followed. And I see what's happening now. I absolutely can see that. I could see 20. Again, I'm just a regular guy. I'm not a financial analyst. I'm not a financial advisor. I'm just a guy who stacks metals. But I after this past month, I could see $2,300 gold. Absolutely. And I could see silver moving. Finally, I could. Okay, this article continues. It says, the analysts forecast gold prices in the near term will move toward another consolidation phase, barring any geopolitical surprise. However, a substantive retracement lower will likely also be limited by resilience in physical buying channels. Resilience in physical buying channels means you and I who stack these metals. The article says, nonetheless, in the midterm, we continue to hold a constructive view on gold underpinned by eventual Fed easing, which should crucially reactivate the largely dormant ETF buying. If it happens in June, if we're waiting till June for cut in interest rates, and Goldman Sachs is saying by the closeout of 2024 to hit $2,300 in gold, I could see it earlier than that. I could see it this summer. I could see it certainly in June if rates start to come down. The article says bullion's price increases have been disconnected from recent outflows seen in gold-related ETFs. Strategists believe investors have been rotating money into Bitcoin ETFs as the token roared toward new highs earlier this month. That's absolutely, yes, I've seen that. The article says central banks have been buying up gold at historic levels, helping to drive up demand over the past couple of years. Adjusted for inflation, gold hit a record in 1980 when it hit $850 per ounce, which would equal almost $3,200 in today's dollars. So we're not even at gold's height. Adjusted for inflation, 1980 inflation, the 1980 big hit, adjusted for inflation, would be $3,200 in today's dollars. We haven't even reached that. So this is what, of course, there was a lot going on back then. Gold did not hit that because of geopolitical reasons, right? I mean, that was the rigged system back then. But looking at where gold is today with this past month, I can absolutely see a solid $2,300